Hello students, I am Remas Hassan. Welcome to Darasa Online. Second session on commerce in the topic insurance. Today I'm going to pose another questions. Mind you, this is a revision for you, and in this revision we are aiming at posing as many questions as possible, and also I'm going to show you how to go through such question. So today we shall proceed with the topic insurance, and in this topic we are going to cover subtopics insurance policies and terminologies used in insurance. To start with, let us look the questions. My dear student, we have this question on insurance policy. Guiding question number 1. Suppose one of your family friends bought a car, but he is not aware on how to take insurance of his car. As an expert in the field, guide him on the essential steps to be followed in insuring his car. The question is about car insurance. So he wants you as an expert to advise or to guide your friend on taking motor vehicle insurance. Now, the steps involved in taking motor vehicle insurance policies are as follows. Step number 1 is the inquiry. An inquiry, while you are advising your friend, or if you are the one who you are supposed to take the insurance cover, you have to visit any of the insurance company, that is the insurer, and ask for information concerning the available insurance policies for motor vehicle. Now, under motor vehicle insurance, there are 3 policies. The first one is comprehensive motor vehicle insurance policy. So we have 3 policies under motor vehicle insurance policy: comprehensive motor vehicle insurance policy, motor vehicle third party only insurance policy, and the motor vehicle third party fire and theft insurance policy. So this information will enable you, or will enable the one who wants to take the insurance cover for motor vehicle to decide on which type of cover that he or she wants for his motor vehicle or for her motor vehicle. So if he decide or she decide to take a comprehensive motor vehicle insurance policy, here it will mean that the coverage for his vehicle will include coverage for damages or losses for the vehicle itself. For comprehensive, it will mean it will cover, for comprehensive, it will mean coverage for vehicle itself, the driver, pedestrians, other properties of those involved in accident. So if there is anybody who has been involved in this accident and his properties or her properties are damaged, then comprehensive motor vehicle insurance policy will cover all this. Now for motor vehicle third-party insurance policy, motor vehicle third-party only insurance policy, under this policy it will cover pedestrian. This is for motor vehicle third party only. It will cover the pedestrians. It will cover properties of other people who have been involved in accident, but it will not cover the vehicle of the one who has insured his vehicle. For motor vehicle third party fire and theft insurance policy, this will cover damages or losses that affect the vehicle itself of the owner, but also it will cover all losses or damages that arises from fire and theft. So after you have got this information, or after the insured has got this information for the policies available, then the next step will be filling the form. We are in the second step of taking motor vehicle insurance. So filling the proposal form. In filling the proposal form, the insured will have to submit all the information concerning the coverage that he wants to take, the motor vehicle insurance cover that he wants to take. So the information that will be filled here will involve the value of the vehicle, sum insured, the amount that the one wants to insure, lifespan of coverage or duration for cover that you want to cover his vehicle, age of the driver, the one who is taking motor vehicle insurance policy has to fill in the proposal form the type of insurance policy that he wants to take, whether it is comprehensive insurance policy or whether it is third-party only insurance policy or it is third-party fire and theft insurance policy. The third step is determination of the premium to be paid. Following the information that has been provided with the insured or the one who wants to take the insurance cover, then the insurance assessor will use that information to compute the amount of premium that he will have to pay to the insurance company or to the insurer. After then the next step is payment of the premium. After the determination of the amount of premium, then payment has to be made, and after payment, then the insurance company or the insurer will issue the cover note. Will issue the cover note. So, cover note, this is a temporary contract or agreement between the insurer and the insured that the amount of premium for coverage or for insurance cover has been paid. Now, the lifespan for cover note is 30 days. After 30 days, then number 5, after 30 days, the insurance policy will be issued, and this is the permanent agreement between the insured and the insurer on an insurance policy for this motor vehicle, and in case of accident, then one can be paid. My dear student, let us move to another question. Our question is, XYZ is a shipping company which needs to insure its ship as a business student show to the company different insurance policies offered by the insurance company that fits for the property. So this question is asking to identify the insurance policies which are offered by insurance company on shipping activities. Now you will see shipping company want to insure its ship. Now ship is a vessel that is used in marine transportation. And for that case, it falls under property insurance. We have 3 branches, which is motor vehicle insurance, fire, and marine. So here you will be required to explain the policies under marine insurance. Now, in marine insurance, this refers to coverage of losses or damages that take place in the high sea, or we can say it covers all losses or damages that occur in the oceans or perils of the sea. And this can either be collision, sinking of the ship, and so on and so forth. Now, policies, we have there are many policies under marine insurance. We have valued policy, open or unvalued policy. We have voyage policy, time policy, mixed policy, port risk policy. You have constructive builders policy. Now, starting with valued policy. The value of the property to be insured is mentioned or explained on the face of the insurance policy. So in case of accident, the insurance policy will have to pay or will have to compensate up to the full value which has been written on the face value, on the face of the policy. Open policy or unvalued policy. Under this open or unvalued policy, this policy does not write the value of the policy or of the asset which is being insured. But in case the accident happened, then it is the time when the ascertainment of the premium or the ascertainment of the loss or damage will be ascertained. Voyage policy. Under voyage policy, this policy covers trips, or it covers the voyage from one area to another. Say, so under voyage policy, the policy here covers loss or damages that might take place when the ship is traveling from Dar es Salaam to South Africa. Time policy. Time policy here, it means that this policy covers the loss or damage that take place when the ship is traveling from one place to another within a certain period of time. So we have another which is mixed policy. The mixed policy, this mixes the voyage policy and time policy. So under this policy, it covers the losses or damage that happen from a certain period of time in a certain voyage. So it covers a particular voyage, say Dar es Salaam to South Africa, so mixed policy, it covers loss which may happen in the sea when the ship is traveling from Dar es Salaam to South Africa for a period of 1 year. Port risk policy, this policy covers the loss or damage that may take place on the ship while it is at the port. And then we have construction builders policy. Construction and builder policy. Now, when the ship is under construction, it takes time to build a ship until when it is put into use. So for the whole time when this ship is being built, then under this policy, it will be covered until when it is put into sea for use. Student, we have seen different policies that are used under marine insurance, and those policies are the ones that govern all losses or damages that may take place while the ship is traveling from one place to another, but also through the policies is the one that will cover all damages or losses that will take place in different insurances. Under marine insurance, there is three types of insurance. So under marine insurance, apart from the policies that we have discussed, but there is insurance for cargo, insurance for hull insurance, and insurance for freight. Under cargo insurance, this is where the insurer will insure cargoes or goods that are being transported by ship. And hull insurance, this refers to the cover for the vessel itself, the ship. So losses or damages to the vessel or the ship. And then another is freight insurance. This provides cover to the ship owner for compensation if he's not paid the transport charge while delivering cargoes or goods. My dear student, also it is important to know the losses that take place in marine transport. We have the total loss, which is divided into two: actual total loss and constructive total loss. Under actual total loss, this is the loss or damage that take place to the ship when it is completely damaged. So when the vessel is completely damaged, then we say it is actual total loss. And constructive total loss, this is where the vessel is damaged to a great extent, but yet it can be repaired. But it is so destroyed that to repair this, it is a wastage. So the amount to be used to repair the ship, which has been so much destroyed, is better to abandon that cost and purchase another ship. And partial loss, under partial loss, we have general average and we have particular average. And a general average is where while the ship is sailing, it might find some problems overseas, and the owner, the crew of the ship, or the owner of the ship may decide to jettison some of the goods to the sea, so as to escape the possibility of ship to sink, or to escape the problem of the ship to get bigger loss, to avoid bigger loss. And particular average, and a particular average, this, it is the loss or damage that may take place just on the part of the cargo or on the part of the ship. Now, for the case of general average, if some of the goods are thrown, then it is the task of the ship owner and the other travelers or passengers who have goods that have not been lost to contribute and pay for the goods that has been jettisoned. My dear student, we have gone through various concepts in insurance policies where we have discussed concepts on motor vehicle insurance policies, but also we have revised on marine insurance policies. So now let us go through another question. Mr. Gumbo is a self-employed in retail business, but he is very much worried about his life, especially at old age. Explain how life insurance policies can release him from such worry if he decided to take up life insurance. This question is about life insurance. You will see Mr. Gumbo is very much worried about his life. And since he is self-employed, most of those people who are self-employed, they do not create a reserve or they do not pay money to the social security funds. And for that case, this is what makes Mr. Gumbo to be worried. But for most public servants, there is social security funds like PPF, NSSF, and others, where the money is contributed through those social service security fund, and for that case, you will find that they are not very much worried. Now, this question, as you can see, it is an exercise. You are required to point out the policies under life insurance. Now, for assistance, I'm going to point out some points or some insurance policies for you. And you will go through those policies to find how each policy works in insurance. Now, we have whole life policy, and whole life policy is divided into ordinary life policy and limited life policy. So the policies under life insurance policy are many. As you can see, whole life insurance policy, which is divided into ordinary and limited. Now, my dear student, go through books and find the good explanation for this. You should be able to explain also this. My dear student, let us look at another question, which is again an exercise for you. That ABC is a merchandising company which needs to insure its goods. As a business, student show to the company different insurance policies offered by the insurance company that fits for the goods. Now, when you look at this question, is about goods insurance, and goods insurance fall under property insurance, and again under property insurance there is a sub-branch which is general accident insurance. Now, you are required to identify the policies under property insurance and general accident insurance. Now, the policies that we have here is one, personal accident insurance policy. Then we have fidelity insurance policy. We have bad debts insurance policy. Then we have public liability insurance policy. Then you have livestock insurance policy. Cash in trust insurance policy. Then we have aviation and aviation hull insurance policy. You have also employers liability insurance policy and others. So now, my student, as you have seen, this question is an exercise. What I have done is to point for you the policies and general accident insurance policy. Now it's your task to go through books, internet search, and read this and others which are not on the board. Try to understand them and be able to explain them, also apply them, and give examples for each policy. Now, my dear student, let us move to another question. Question number 3. This is an exercise for you. Analyze various types of fire insurance policies that an insured must be aware on before taking up insurance. When you look at this question, the question is about fire insurance. Fire accident or fire risks, when they occur or happen, they may cause damages or losses to assets that may be in the private houses, but also assets in warehouses or goods which are kept in the warehouses can be burnt and damaged. But also fire can cause damage to farms, estates, and fire can cause many losses. Now, causes for fire are as follows. Fire can be caused by inflammable materials like petrol or gases. If there is any leakage, gases leakage, then in one way or another, if it meets fire, then it can erupt. But again, ignition and lighting, following maybe electricity faults. Due to electricity fault, also fire can cause damages or losses. Now, our question needs you to identify and explain various types of fire insurance policies. Now, I'm going to identify to you some of the fire insurance policies. We have specific policy, then we have another which is open or unvalued policy. We have valued policy. You have declaration policy. You have average policy. You have floating policy and others. Now, read again books, go and surf in the internet. So through internet search, read these policies and be able to explain them and also be able to apply them. But also, they are very well explained in the book titled Commerce, Its Theory and Practice, which is written by Evelyn Thomas. So you can read also that book and get all this, get the information about all this. My dear student, let us finish up with terminologies used in insurance. Under these terminologies, there is a number of terms that are used in insurance. You have to know all these terminologies, all these terms, and how they are used in insurance. Here, there is a question for you. Using the terminologies written below, tell your friend how insurance company will use them while processing an insurance cover. So, you can take note of this in your notebook, the terminologies. You have the policy, you have premium, you have surrender value, you have actuary, you have insurance assessor, you have insurance underwriter, then you have claim, you have sum insured, you have settlement, you have average clause, you have no claim bonus, you have subject matter, you have waiver policy, you have double insurance, you have co-insurance, and so many others terminologies, like you can add, assignment, etc. Now, since this is a revision, then use this term to tell your friend how are they used in processing insurance cover. Now, my dear student, from the terminologies I've given you and the others that you will add from various books that you are going to read, you have to explain, you have to be able to tell how these terminologies are used by insurance company in processing insurance cover. Now I'll give you some few examples on how these terminologies are used. One, policy. The policy or insurance policy. This terminology, it is used to mean the contract or the agreement between the insurer and the insured on insurance cover. So in the policy is where we get all the information concerning the type of insurance policy and the time that that policy will cover and the type of risks or loss that will be paid or will be compensated if the accident or the risk insured occur. Premium. The term premium is used by both insurer and the insured to mean the amount that the insured has to contribute to the common pool, that is to the insurance company or to the insurer, which in the long run the insured is expecting to be compensated if the risk insured occur. Surrender value. Surrender value, this term is used by insurance company or insurer to mean that in case the holder of life insurance cover wants to terminate his contract, then the insurer will pay the insured an amount known as the surrender value, which is the amount used to end the contract between the insurer and the insured. Now, actually, this is an insurance officer who take part in assessing the amount of loss, if any, after the occurrence of an accident. So the actuary will do this task, but also he can assess the property before the insurance cover take place. Now, we have another term, claim. This is used by both the insured and the insurer. By the term claim here, it means after the accident has happened, then the insured will request for payment or will request for compensation. The act of requesting is known as claim, and this claim is done after filling the special form for requesting payment, which is known as claim form. Now, using the same modality that I have used to express or to explain to you how these terms are used, go through the other remaining terms through books, through internet search, and find out how they are being used by both insurer and insured in processing insurance cover. Thank you for listening. This marks the end of my presentation. Go through the exercise I have given you. Next time we shall proceed with the topic export trade. Thank you.